webinar, How to Grow Your EV Charging Business for Successful Use Cases. My name is Kate Niechet. I am content strategist at MaxBill. I'm also will be moderating today's event. And also let me introduce my colleague, Ronnie Rector. He's a senior project manager at MaxBill, and he will walk you through successful use cases in EV charging business today, and will share with us very interesting insights of the business. So before we get started, let me remind that we have QA chat. So please, throughout the whole presentation, throughout the whole webinar, do not hesitate to drop your questions. We will gladly answer all those questions at the end of our webinar. Okay, so before we actually get closer to use cases, let me introduce MaxBill, who we are, what we do. It's complex solution designed to deliver billing, reconciliation, CRM, partner agreement management, invoicing for multiple verticals such as energy, utilities, telecommunications, connectivity, and iGaming. We've been in the field for 20 years now. I think everything around billing is our bread and butter. We have 75 product implementations worldwide, and the 5th generation of the product. Okay, and speaking about the energy sector, we work with energy suppliers, including renewables, distribution system operators, distribute energy resources, EV charge point operators, and in general EV charging service providers. And you can see the list. It's just not all of them. We work with energy suppliers from UK, from Brazil, Spain, Northern Ireland, Ukraine. Speaking about utility sector, these are municipalities, city services. We provide tenant billing to the housing sector, private sector, work with public and independent utilities. And again, you see the list of utility organizations, CEP in Ireland, Champion Energy in Spain, Infostar in Serbia, etc. So particularly for EV charging providers, what we do a modern system for billing settlement and revenue sharing and commission to streamline, obviously, billing processes and evaluations to expand the scope of commercial activity of EV charging service providers. So you can see how diverse actually the charging is. This are obviously EV charging stations. We see bundling of home charging with public charging, EV stations in shared buildings or often parking, so a lot. And before actually get into, again, scenarios, let's just have a look a little bit at trends, what's going on in the world, especially in Europe, in terms of EV charging business. So you see we already see that the number of electric cars had this 70-fold increase since 2016. And then we see that the number of actual charging points has also increased with a 6-fold increase since 2016. But there's the gap, and I call it this gap an opportunity gap for existing CPOs, and also for those traditional businesses in the energy sectors who want actually to add EV charging business to their profile. Okay, and now a little bit what's going on in EV business right across Europe and China, USA. Based on EV markets reports, as of July 2024, it's the latest stats. In Europe, they have 900,000 public charge points already, which is 55% increase from 2021. Of course, China and USA, they are leading in this domain. So China has 3.2 million public charge points, and USA have 181,000 public charge points, and they invested a lot, right, to achieve 500,000 stations by 2030. Okay, So, and what we said, MaxBill, and I want to share it with you, the different price creation frameworks across Europe. And well, the fact is, the Europe is trying to harmonize pricing strategies, but of course, every country has some differences in infrastructure and regulations. Like, for example, in Germany, they have this legislation that has specific standards to measurement devices, which makes billing pretty nuanced and pretty like strict. You cannot add some unauthorized adjustment to the billing. Okay, so also what we see in Europe, again in Italy, for example, the cost of electric vehicles charge, they are impacted by the price of electricity. And we also see that the cost depends on whether it's a charging at private premises, private charging stations, whether it's a public charging, okay? And in Norway, for example, and Sweden, it all depends whether it's an ultra fast charger or it's just a north or a south, for example, right, of the country. So it all very nuanced. Okay. And as you can see, and here, the essential tech stack for CPOs, we can see where actually the charging is being shaped. We see the whole ecosystem and yeah, the tendency of CPOs getting into EV charging networks. We see it everywhere. Like they share roaming agreements. We're going to talk about it a little bit later. And of course, the success of this business is hugely defined by our hardware agnostic software, like where hardware meets software. And this is where MaxBill fits in with its billing solutions, revenue share and contract management, partner onboarding, CRM, etc., right? And by the way, Ronnie will walk you through all this in detail. And we have a lot of requests asking if one CPO from this kind of area can get into relationships, commercial relationship with another CPO, and what if they both have their specific or different pricing strategies? Is it possible to handle or manage it under one pricing sort of billing system or platform? And the answer is yes. This is because of multi-play nature of actual billing solution. Okay, so I'm giving the mic to Ronnie, and he will walk us through the solution in detail.
Thank you, Katerina, and hello everybody again. Now we are going to explore some key aspects of billing behind managing electrical vehicle charging networks, from handling multiple services and billing scenarios to managing partner contracts and revenue sharing. We will understand how these processes work to ensure an efficient operation in this industry. So we have some key aspects when we are talking about billing in the CPO industry, which are product catalog for multi-services. In AV especially, we need to have flexibility, yes, to manage a big variety of pricing structure and customer types, including per use and subscription of any type. Billing processes and this billing system must be able to handle various billing scenarios, whether it's a simple flat fee or usage basis, or more complex cases such as tiered or conditional pricing. Also, we have partner contract management because in CPO we usually involve some kind of partnership with other companies or parties, such as energy providers, site hosts, investors. So managing this relationship is very important for an accurate revenue sharing. Transparency, especially in multi-entity billing and revenue settlements, it is essential to build trust between operators, partners, and customers. who are the drivers. Process automation, especially when a network scales, manual processes become insufficient. Yes, and automating billing and payment and revenue sharing will reduce error caused by manual work. And reporting and analytics for greater insight and better decision making. That being said, let's dive a little bit deeper into the aspects. So, as mentioned, one of the key challenges for EV charging operators is managing various pricing models for different customer types. Whether the customer prefers a fixed monthly fee or pay as you go, which is based on the consumption. So, for example, if we have an office complex, for example, yes, and employees may be offered a subscription model for unlimited charging, while visitors or guests may prefer to pay based on the actual use at the charging station. Now, this type of flexibility is ensured that each type of customer gets charged fairly. Here, we're talking about business to business because, as I mentioned before, it was related to the electrical vehicle driver and the pricing for this type of customer. But in CPO, we also have billing to other businesses that order the services of a charging station. So for those businesses, we also have a type of scenarios, which is firstly a monthly fee, where the CPO offers a consistent monthly fee for station management services or maintenance fees. We also have a rate per kilowatt, when the CPO will charge the business on actual electricity consumed on that station, meaning if the business did not consume any electricity in a specific billing period, the business will not be charged. We have hybrid billing models, which is an approach that combines the fixed monthly fee and the rate per kilowatt. We have tier pricing. So CPO may also implement a tiered pricing structure, and it's based on usage level. For example, if a business uses a certain amount of electricity, he will benefit from lower rates until a certain threshold. And we have customized billing plans because, as we know, B2B, we can see a lot of different pricing structures and specific requirements. For example, offering discounts on off-peak hours. Moving on to partner management. So as I mentioned before, in CPO, we have many parties involved in these scenarios. We can see partnership between the CPO, the energy providers, investor, and site hosts like shopping mall on or an office building. Imagine we have a large shopping mall where the investor provided some of the capital needed for the installation of charging station. So while the mall owner contributes the land, the CPO manages day-to-day operation, and this partnership requires clear agreement on revenue sharing and usage tracking. So the system should track all charging sessions and does revenue sharing and calculation between all parties, between the investor, the mall owner, and the CPOs. Transparency. Also, it's very important to ensure that we are transparent with our partners, with the customers. For instance, when an electrical vehicle driver charges on network that is not their primarily provider, which is, I'm talking a little bit about roaming, which we will soon get to, the revenue must be shared between the two operators. Okay, and the system needs to ensure that this process is done in the correct way, with clear records showing how much revenues should be split between the two networks who provide the charging services. And process automation, especially when the EV charging network scales. we need to have automation in place, because imagine a network with hundreds of charging stations. So instead of manually processing each transaction, an automated system would ensure that charging sessions are recorded correctly, validated, and billed accurately. This will not only save time, but improve the accuracy of the billing process and reduce the risk of human error. And last but not least, we have reporting. So it's very important to utilize analytic tools to enable the operators and the partners to get an informed decision, yes, based on the comprehensive data insights that we get. Because an operator, for example, yes, may notice that most of their charging sessions happen during peak hours. Now, using this data, they can introduce discount rates for off-peak hours to encourage customers to charge at less busy times, and as a result, it will reduce the congestion at the station, allowing to have more customers on a daily basis. That being said, let's take a look at our first case today, which is a customer without contract. What does it mean? A customer without contract are typically one-time users of EV charging station. Those are drivers who do not have any predefined agreement with the charging operator and are usually charged on a pay-per-use basis. For this kind of users, the billing is pretty straightforward. They just pay for each session individually based on their consumption. There might be some additional costs depending on the charging policy, such as parking fees and connection fees. However, we know that there are unique challenges of managing those type of customers that do not have any agreement with the CPO. This user may only use the service occasionally, but we still need to record their session and track it. And in our system, we track every charging session in real time. We log energy consumption, session duration, and associated fees to ensure that this customer will receive an accurate billing. And another important point in this use case is even months after this customer without a contract charge at a specific station, this customer might call the support center and request some documentation for tax deduction or reimbursement. And in that case, because our system securely stores the session data, it will allow us to provide the detailed report on whatever is required. And potentially in the future, it's also an opportunity to register this customer as a future customer with a contract. Yes, we can also make future promotion or marketing campaigns. And yes, we can eventually make him a customer with a contract. Which brings us to the second case, a customer with a contract. Those type of customer do have some recurring agreement with the charging operator, such as a subscription or pre-arranged monthly or yearly plans. This user often benefit from special rates depending on the terms and bill according to their contract. Unlike the previous case, those type of customers have billing cycles, meaning they are not paying directly the charging station. We introduce for them an invoice on monthly or quarterly basis, depending on the agreement, with a consolidated invoice to cover all their charging sessions. Now, as a billing solution provider, we understand that this type of customer also have some complexities that come with managing the billing cycle of this customer. Because on one hand, this type of customer brings stability and predictability because they have a contract. But on the other hand, there are challenges such as complex pricing structure, meaning that contracted customer may have tiered pricing, as I mentioned before, the usage limit or special discounts for off-peak hours. This dynamic structure are difficult to manage manually, especially when a network scale and have a big database of customers. Our system is designed to automate these complexities, whether it's handling different pricing tiers based on usage or applying peak hour discounts. We also ensure that all rules within the contract are followed precisely to minimize this potentially manual errors. Another challenge with customer with a contract is monthly billing and usage tracking. It means that it's crucial to provide an actual monthly billing and keep track of their usage over time. Okay, this includes managing pre-agreed limits, overage charges, and offered benefits such as rollover balances, deposits, and direct debit options. Now, our system automatically tracks the customer usage in real time and put it within the agreed billing cycle. It calculates the overages or unused balance to reflect them in a monthly invoice. In addition to that, we also offer direct debit option, making it easy for customers to pay automatically to ensure a hassle-free transaction. Meaning, if a deposit is required upfront, the system will track this as well and apply it towards future bills. Now, this level of automation will provide also transparency with the customer and result in an accurate invoicing, which is very important in billing. And the last challenge with this type of customer is handling contract adjustments. Contracts are not static. They often need or require adjustment based on the changing needs, whether it's updating pricing models, adjusting limits, adding new services, and manually managing those changes across multiple customers can quickly become overwhelming. So in our solution, this process is simplified by offering full configurability for our quick updates. Operators can adjust their pricing tiers in a matter of days and modify usage limits or introduce new services without risking the quality of the billing, which often can be ruined when we have a lot of manual movements. So handling all those complexities will eventually result in a loyal customer base. Now let's take a look at a more complex scenario. Here we have a partner agreement where we have several parties involved in a certain deal. So in that case, for example, we have two landlords who have an agreement between them to share the revenue and the expenses on the basis of 50-50 each. We have two locations on which we have the station installed. We have a commercial building and the public parking. So in the case of the commercial building, the agreement between the landlords and the CPO was that the landlords will pay 50 euros per station per month and receive a revenue of 5% of the total electricity consumption consumed in that station. Speaking of public parking, the agreement was also that the landlord will pay 50 euro per station a month and receive a specific amount of money, which is in that case 2 cents per each kilowatt consumed in the station. So as you can see, we have different pricing structure here. One is percentage per kilowatts consumed, and one is a certain amount. Now, in the end of the billing cycle, whether the charging station were in profit or in loss, we generate a financial document, which can be a statement, if the overall is profit, or an invoice if there is charge that the CPO should present to the landlords. Now, after we generate those financial documents, and because we are keeping the relationship between all parties involved, we can, based on the relationship defined, the percentage defined before, we can introduce to each landlord his part of the invoice or his share of the revenue. And in that case, we combine all this complex agreement into simplified process. Moving on to our last use case, which is roaming. For those who don't know, roaming in EV charging refers to the ability of an electrical vehicle driver to charge their vehicle on network that isn't their home network. Meaning, if they have their home network, they have probably an application installed on their mobile telephone, and they usually use it. This concept is similar in some way to mobile phone roaming, where user can access services on a network that is not their initial provider, while still being billed by their home provider. The key points here is that charging session data is shared between all visited networks, between all the CPO who provide charging services. And the home network is the one billing the user, while the visited network receive some share of the revenue. Most likely it will be most of the revenue because they provided the electricity itself. And yes, roaming simplifies the customer experience in the end of the day because it allows the electrical vehicle drivers to charge at any available station without having to sign up to a new application, share their details. And a clear example for how roaming works and how we cover this case is, for example, when a driver with a subscription, let's call it network A, going out of town, and he wants to charge his vehicle on network B, which has an agreement with network A. The driver can use their application from network A to start a session, while network B will provide the actual charging services. And at the end, after the driver is billed by network A, we have to do to reconcile the revenue between network A and network B according to their roaming agreement. In roaming agreement, we also can see that there are two types of schemes. The first scheme, which I talked about now, is a direct agreement between CPOs, where they share their data between them and sharing revenue between them. But we also have another scheme, which includes a roaming hub. A roaming hub is a central platform that connects all different CPOs or EMPS, allowing driver to charge on multiple networks. And the hub is managing the session data and sharing it between the charging point operators, the CPOs. For example, when an end customer of one of the CPOs, when we have billing, which we are doing billing for, charges on another network. The CPO billing system retrieves the session data from the hub because the session data goes through the hub from all the CPOs and applies the customer usual rates and bills them accordingly. Okay. Then the CPO billing system collects the entire amount from the customer, but a portion, usually a big portion of this, just a portion of this revenue is sent back to the network where the session took place because it was facilitated by the roaming hub. And in that way, our billing system plays a role in supporting reconciliation between all the CPOs involved by automating the collection, validation, and exchange session data through the roaming hub. And after the roaming session, the system ensures that all session details, such as energy fees, applicable rates, are accurately logged and shared with the roaming partners. Lastly, we automate the reconciliation process, checking the data and the calculation revenue share for each CPO that was involved in this scenario. In summary, I guess we have covered how the billing system supports operation, transparency, revenue sharing, and efficient reconciliation between EV charging networks or CPOs. So thank you for your time and attention. Now I will pass the mic back to Katerina.
Okay, thank you, Ronnie, for walking us through the most commonly spread and successful business cases when it's about EV charging. Yeah, actually, what we see is the number one scheme, individual networks, is very common across Europe. In Germany, CPOs get such regional internal networks called consortia. We see it in France, CPOs get in internet regional networks. We also see like in Norway also Fortum, a very big network of EV charger service point operators. Okay, so yeah, I guess the business is very promising. And now you see the MaxBill solution that actually you see it all. It's a glimpse into the product, and which covers the most I think critical and pivotal needs of EV charging. Again, like it was mentioned, billing, revenue share and reconciliation, contract management, partner onboarding, and so on and so on. And again, as a business that is already doing EV charging business and is going to expand, what we get at the end if we apply a solution that allow us to scale up and implement and apply to this one unified system any number of customers and partners, and manage them onto one billing system. So what do we get? Of course, we can expand customer options. We can segment them. Of course, we optimize revenue management. We get on board as many partners as we want. And all of that is to be integrated very fast, which allows the quick collaboration and the quick creation of networks. Okay, so now is the time for QA question. We are doing well. I think we're doing pretty quick. I'm gonna read. I think we had one. Let me check. Okay, if the EV charging company is a secondary business, okay. I mean, if EV charging business, right? It's a secondary business, and the main business is supplying electricity. Is it possible to run both companies in the same system? Ronnie, do you want to answer this question?
Yes, absolutely. It's actually we see it more and more that businesses that supply utility tend to go into the EV charging industry. It is common, I can say, and I'm sure we will see it more and more. And yes, it's absolutely possible to run it both on the same system. We can have unified customer management. We can have combined billing and invoicing, because we can have the same customers. Yes, and absolutely, our billing system supports it. We can have separate product catalogs and pricing for the EV users, for the electricity consumers. Yes.
Okay. Yeah, actually, recently we've had two clients of ours that actually came with this idea. They do like their conventional, traditional business in with electricity and energies and gas and stuff, and they want to add this option to their portfolio. And they came and said, "Here's like scenarios we want to work on within our country, and we plan to expand to this and that country. So is it possible? Show us how we can implement it within one system. And we walked them through this whole scenarios and showed how it was possible actually. So yeah. Yeah, I don't see any other question. I think everything was pretty enough clear. So yeah, if you have any other questions, please do not hesitate to reach out to us. We will gladly answer. And also, I'd like to announce that our next webinar, we're gonna have it in November, and it's all about billing trends. What about the ins and outs of billing? Since we are into billing so much and we know everything, like the science behind it for 28 years, right? So we have the webinar about billing for multi-utilities and energy companies that is about to expand and scale up in 2025. We're having a huge webinar for them about it. So yeah, and you are highly welcomed. We will launch a little bit later the schedule and the possibility to register. I think this is it. Thank you so much for participating. And again, you'll have the recording on your email boxes, so you can share it with your teams, with your colleagues. And yeah, see you in November.
Thank you, everyone.